What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you as always, I am the People's Champ of Wall Street, the bearded boy wonder Dave Bartosiak, and today, my friends, we're talking about Square, ticker SQ. Now, I've had Square. Well, I had Square in home run. I no longer run home run, but I think I think Boland's still holding it over there. So I know a little bit about the company. You know who else is a big proponent of Square is Shiraz. Shiraz likes it too. He's intrigued by the fintech space. And obviously Shiraz and I aren't the only two people on earth who like Square because it's been off to a pretty solid start this year. This year's been great. I can't even say start this year. It's November. The year's almost over already. Man, let me tell you, time flies. And it flies much differently when you're in Florida because there's no, like, I suppose there is a change of the seasons, but it's not the same, right? So here in Florida, it's like, oh, it's November. You're going to get like a little bit of rain, then the rain's going to stop, and it's going to cool off to like 75, and that's your fall. Not complaining though, man, but a little leaf changing would be nice, but that's okay, man. I know where to go to see that. Trevor, how you doing? Kurt, the gang's all here. Why don't we go ahead and get started? I'm just going to kick things off here. Get elbow deep. Before I do, if you haven't already, feel free to join us in the chat room over there on Discord. The gang's always there, hanging out, looking for picks, talking options, talking stocks, get some decent ideas. We got some camaraderie going in there, so I like that. Also, if you're not on the distribution list, so you get these emails letting you know when these shows are, go ahead and send me an email, livetrader@zax.com. I'll get you on the list, and we'll go from there. Okay, so we're going to kick things off like we always do here on Live Trader, and that's by looking at the price consensus and EPS surprise chart here on zax.com. So as always, black line corresponds to the right y-axis, which is price. The red arrows are earnings misses. Green arrows earnings beats. The multicolored lines represent the evolution of our Zax consensus estimates over time, and go along with the left y-axis. Now, I know what you're thinking. What's up with this? What's going? What? Huh? We'll get into this a little later, so don't worry so much about, pay no attention what you see on the left y-axis. Just don't worry about it so much. Just know that it's like a gauge, kind of relative gauge is what you can use it for, okay? Oh, Jack, Tracy, Mike, PJ, Kurt, Trevor. All right. And I'm sure Freak will come in here a little bit later once he realizes what's going on. So yeah, what are some of the talking points we need to take away? The key takeaways here. Lots of beats, right? Lots of beats recently. Lots of growth, which is good. Here's the other good part. Increasing earnings estimates. Big time here, right? So this, at first glance, you look at this monstrous run and you just go, holy smokes, too far, too fast. But remember, you gotta lean on what you're seeing in the growth. If these earnings estimates are going up, then perhaps that justifies the move in Square. And we're going to get more granular on this when I bust out my G14 classified Zax ZRS. And we're going to look, PE ain't going to work here, because as you'll see, it's not really, we don't really have the E. So we're going to have to look price to sales on these guys. see where these valuations are, and see if we can justify this move to the upside, and potentially what does that number have to be to continue to justify this, because that is the worry. Okay, so you can chalk this up. The question of the day is too far, too fast. Dun dun dun. Let's look at the detailed estimates page. We've got them as the Zacks rank number 2 buy right now. Style scores: F's in momentum and value, and only a C in growth, which is surprising to me. Top 49% of our Zacks industry rank. I would kind of just take that with a grain of salt, because Square is kind of on its own here in this fintech space. They're going to report after the bell tomorrow, so you got the rest of the trading day today and all of tomorrow to figure out if you want to mess around with any of this. Let's look at sales numbers, because this is going to be where core of my analysis is. Sales. 30% current quarter growth, 30% next quarter growth. Current year looks like 27.35. Next year looks like 27.51. Where is this growth coming from? So it's not just the payment processing. That's part of it, right? But then you got this thing called Square Capital, okay? And they usually don't write it in magenta, in squiggly, messed up letters. Square Capital is their lending arm. So basically what they're doing is they're taking all this payment processing data that they're getting from their clients. Their clients actually have a tendency to stick around with them for a while because they offer such an easy solution for the small to medium-sized businesses here. So they have all this data about their clients, and then now they can use that to lend smarter, they believe, than other, traditional lenders, where traditional lenders make credit decisions based on, certain criteria, basically what they have available to them. Here, since they have all the payment processing, they're confident that they can make better, wiser credit decisions, and therefore their margins should be a little bit better and their losses should be lower. So far, that actually has been the case on their lending arm, so that's a major area of growth for them. Let's look at the EPS side of things. And remember, I was telling you, it's the E that's a little squeaky over here, because last year they lost 9 cents this quarter. We're looking for a 6-cent quarter this quarter, so they want to come into profitability, and that's usually a good thing. Next quarter looks like, again, these numbers, let's just take these triple digits and just not, let's not worry so much about that, right? Let's look at the actual numbers here. So if you're going from -9 to 6, that's 15 cents of growth. Next quarter, from -4 to 7. But if you notice, quarter over quarter, you're only making a penny more. Current year number, you lost 35 cents last year. Hopefully make 21 cents this year. Next year, made 21 cents last year. Hoping to make 45 cents. So a little bit of growth there. Not bad. But, don't look at these triple-digit numbers and think, oh my gosh, they have to skyrocket. Now, where is this bullishness coming from? Over the last 60 days, you've got 4 analysts increasing their numbers for next year, 3 for the current year, 2 for the current quarter. To the downside, not too many brave souls are out there dropping their estimates on this company. But just over the last week, you do have an analyst raising current year and next year numbers. What's the overall impact to our Zacks consensus estimate over here? It hasn't been much. Been stuck on 6 for the current quarter, 7s for next quarter, blackjack for the current year, and 45 for next year. So despite these moves, not a lot going on either side. Okay. Surprise! Last quarter in line. Quarter before that, nice little beat. Quarter before that, 5-cent beat, then a 2-cent beat. So they've been surprising a bit to the upside, except for that last quarter, just wasn't there. But you got to hope that maybe the lending side of the business is really rocking and rolling. So here's the thing. Pretty solid move here to the upside. Sure, Miguel, I'll throw Shopify in there. only if it's gonna, um, only if Jeff promises he won't be offended by us throwing Shopify in anything. A couple times the stock has interacted with its 50-day moving average. Happened in February for a while. They came in and bid it. Then it happened again in August. They came in and bid it again. Now we've got a stock that by most measures, you're going to have it as overbought. Now, hang on a hot second here. These are money flows. So this shaken money flow I've used before. Essentially, when it's over the zero line, you've got buying pressure. When it's under the zero line, you got selling pressure, right? So the last time there was any selling pressure in this was when it was down here at the 50-day moving average. And then since then, you've had, some institutional buying. Now, this shaken money flow, there's one time when you can't use it, and that's on gaps. So like this gap up would mess it up because the way the calculation works, it just throws it off, right? But if you notice, it's a 21 period shaken money flow. So all you would have to do is go 21 days after the gap, and now your data is new and okay. All right. So since there hasn't been many huge gaps in Square, we can apply that. So what you want to look for when you're doing this shaken money flow analysis is a divergence. So perhaps this coming down while the stock's going up, that would be a bad thing. But here they're kind of moving in line, right? They're both going up. So you just have confirmation on the money flow. So it's really not telling us too much other than there's been some buying pressure, but then again, I didn't need shaken to tell me that. Commodity channel index, I like to use. We got Corolla ads. When I get this Corolla ad. Sorry, guys, I didn't even realize that I had just the. I know you guys all want to hear about the new 2017 Corolla, but I just want to get it out of here. Yeah, the nice elephant, right? Elephants playing soccer. At least that's what's going on, because there's been some male enhancement stuff that's popped up, literally, on this chart. It was wildly inappropriate. So I'm glad that that's not here today. Anywho, so there you go. So commodity channel index crossed over the zero line. Oh, here's my favorite signal, guys. When you're looking, you have a stock that's broken on through, that's up near 52-week highs like this one was here. Okay, I know rear view mirror 2020, right? But I'm telling you, when you get the commodity channel index to come down to the zero line and the stock's at highs, I almost always end up buying, because that's an awesome continuation pattern that I've used in Momentum Trader to great success. So here we go. Boom. No, heavens no. No vets for Corollas. No way. No way. But I will tell you, Dr. Paul, I've tricked my girlfriend into getting like an '07 DB9. Definitely getting a service contract on it. 100% getting the warranty, but I've tricked her into looking at a DB9. I am ecstatic. I can't wait. V12. Oh man. Anyway, so Square up here at highs. It just keeps trucking. So really, we're not going to glean much other than this is overbought. Potential resistance on the way down should the stock come down. Where's my volume at price indicator? Perhaps this is going to tell me something, because right now I'm not getting much. All right, so you see this? Don't crash on me. Don't do it to me. You got a lot of the volume. It's not ballers. Kurt, you can get it for, I'm talking like 40 to 50K for a great, maybe even under 40, depending on where we go. But she's doing great right now at LVMH. Trust me, she's doing. Mike, just lower the bar a little bit, guys. I'm telling you, just don't be afraid to get a 10-year-old car with a service contract. I'm telling you. Especially if you don't drive much. Treat yourself. Roll the dice a little bit. So we see this big band of volume out here. But then now here's another band sort of in this $33 range. Okay? So I'm expecting that to attract should the price come down. telling you guys, there are some deals out there. Don't get me started on cars. We're talking about Square here because you get me on a tangent. I see what you guys are doing. Up and it blew up. All right, so pretty much $33 to the downside. We're gonna give this thing a chance to go ahead and load up, and that's all. That's all we can look for. GTC Luso, get out of here, man. How much? We're talking old stuff, Jeff. We're talking reasonably priced automobiles that you can enjoy. So looking at Square, we don't have a lot of data, so we can't go way back. So on the revenue side, we're not going to get too much. How far can I go on this valuation history? Is it going to be the same thing? Perhaps. Here we go. So they're paying more and more, not just for $1 of earnings, but for $1 of sales. And look at this. Look at what's been happening. So this is trailing 12. Older NSX, Kurt? Yes. New NSX? No. No, I can't enjoy the unreasonably priced stuff. Goodness. Price to sales just this year. Look at how this is ticking up. It's ticking up and going up. So the valuations are starting to get a little bit extended. You wanted me to put shop up here? Oh, yeah, that's a little expensive too. 9.1 versus 5.14. What about PayPal? How does Square stack up to PayPal on a price to sales ratio here? And there you go. See, there's the comp, right? Getting kind of close. Still actually undervalued to PayPal. Although, you know what, this chart, I'm a little bit confused at this chart, to be honest with you, because here I'm seeing in the 7s, not in the low 5s. So I think maybe this is giving us the average or something. Either way you slice it. And then I suppose you can't do their take. I don't know if you want to compare Square to Take Two. We could do a sub-industry or Zach's sub-industry here, and that's going to give us internet software. That's not really going to do it. That's not really going to do it. But whatever, I suppose. Anyway, so it's getting pricey, guys. Any way you slice it, and just for giggles, just because I like giggling. Let's do forward 12. Let's do a forward PE. Let's do a forward PE on Square. And it's not even, I don't even know what's going on here. It's just, what's happening? What is happening? I think these numbers are off here a little bit. Okay. All right, let's get out of here. How has Square reacted to earnings here? So this screen here gives me how they've done 2 days prior to earnings, 2 days after earnings, the last few reports. Last time, down 5. Time before, up 5.7. So basically 6% downside, almost 6% upside. Then you got just huge moves here. December was 17%. September was 5%. June was 12%. But March was a negative 23.6%. And I think that ought to be the first quarter. Yeah, okay, so then in December, it didn't move too much. So there's a lot. Let me address this real quick. Okay, let's do it. Price of sales on VNTV. Doc. Let's do it. I'm open. I'm open to tickers that you guys throw out. Let's just do this one. There you go. Oh, so I see what's happening here, guys. You see what's happening? Finally, I figured it out. This label's just wrong. Yeah, this label's just wrong. Because it's working here on the chart. You see it in the 7s? So Square is in the 7s. 725. And your VNTV is down at 532. So a little overvalued here. But let me actually temper that statement a little bit. 27% growth. Does your VNTV have 27% revenue growth estimated? Yeah, I don't know what we got going on here. What about PayPal? What kind of revenue growth are they looking for on PayPal? They're looking for almost 20% revenue growth, so not that far off. Oh, I hate it when I click that. Nope, 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 nope. Ah, there we go. Back to PayPal versus Square. Just one more again. Sorry, I'm knocking in the desk here. And here's PayPal's price to sales. And again, these labels are off for whatever reason on this chart. But you can see same sort of thing where they are paying 7 times. Okay, so I guess that's what your fintech is. That's the price to sales multiple that they're gunning for right now, as an industry, right? Do we know what PayPal's done recently? Let's do that. Let's go back to our consolidated surprise, and let's look at PayPal's recent moves. So you do have them with a 5% move, 3%, 5%. So there's been some positivity. And you see where their numbers are compared to where we're at for Square. Okay. So before we talk about the options chain here and dig into that, what are we thinking about Square? Looks good. 27% revenue growth is obviously great. I like that these EPS estimates have been starting to tick up. Not just the growth. So the growth is baked in and you're getting more upside potential. That's why it's Zach's ranked number 2 buy right now. So these are all good. So just the question becomes, is that revenue growth going to be sustainable? And how's the market going to feel about them finally making some money now? Now remember, guys, you bet on the jockey, not on the horse. Square's got a pretty decent jockey here. Our good buddy, Mr. Jack Dorsey of Twitter fame, running the show over here. So maybe he put Twitter on a back burner, and Square's really his project. He's putting most of his energy towards. I don't know, but if you're a fan of Jack, you ought to be a fan of Square. You don't know Jack. Remember that? Remember that? Jeff remembers that. I know you remember. You don't know Jack. Okay, so let's look at the side-by-side view here. We're just going to go the front week. This is going to give us an idea of what the applied volatility is on these calls. Almost 37, so that's what we're going to use. Bust out the handy-dandy calculator. Put this in a reasonable place. 37 call, 170 by 185. We're going to call that a $1.77. Then the at the money put, 170 by 180. We're going to call it a $1.75. So 352 is what they're looking at on a $37 stock, looking for 9.5% on this bad boy. 9.5%. Oh, hey, what's up, folks? Hey, look at this. Fresh blood, fresh meat. Welcome. B-Boy, Jacob. Bodon. Is it Bodon? I got an uncle named Bogdan. You're not my uncle, are you? 9.5%. So that's nice. That seems, I don't know. What do you guys think? Does that seem a little much? Does it seem a little much? If you think about it, let's look at this. Let's go to the stacked view, okay? Gonna dig through this, put my nose in it, see what we got going on. All right, you guys see what I see? This is what I see, okay? And again, just casual observations. I haven't been doing enough of these casual observations with you. You see, open interest on the call side in that front week. 400, 300, 200, 300, blah, 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 blah. You go to the put side, 2,900 contracts at 36, 1,600 contracts at 35, including 800 of those today. So not enough for Dr. J to come on CNBC and say unusual put buying activity. But just something to note. I want to look at the monthly expiration, see what we can see here. And again, guys, I just sort of eyeball where these big levels are. 40s. Big level at 40. Then on the put side, 35s, 34s. Okay. All right. So there you go. So nothing really jumping out at me other than there's 35s are in play on the put side and 40s. So somebody came out here and said, put some action on these 40s. That's for sure. All right, now as much as I know you guys love the super short-term ideas on this, we will go back and do the super short-term for those more adventurous, the super adventurous types. But let's go out to December expiration. December! I'll be a dinosaur in December! No, you won't. You'll be fine. Let's look at December. That's right, guys. We're going to start shifting, guys and gals. Peeps. Not the marshmallow kind. We're going to go out to December. See what we got going on. Yeah, Dr. Pauly absolutely could be protection plays. Look at, they're still paying. I mean, these are some pretty good numbers that they're paying out here. 37s, 38s, 39s, 40s. Still paying some money out here. So this is good. So if we were to do 37, now remember the market was looking for basically $3.50, right? So market's looking all the way out here. What if we did this? So for the bulls out there, going along a 37 call. This is the December 15th expiration. 253 price of the at the money call. Simultaneously shorting the $40 call, which is where a lot of that action was in that other month, right? You're going to get back a $1.33 of that. Oh, what am I doing? Come on, Dave. 253 minus the 133. So 120 is going to be your net outlay on this trade. Now, the difference in strike prices is $3 minus that 120 means you can make 180 on your 120 or 150%. What would you need to make 150%? Shares of Square would have to close at or above the $40 holler at expiration on December 15th. So there's one way to do it. Here's another way. You could go long this. So let's say you were long the 37. Well, let me put this in here first before I get carried away. So a bull debit idea is long the December, still December, Dave. December 15th, 37.40 call spread for a $1.20, right? Is it $1.20? Net debit. Relatively inexpensive, get exposure to the upside, and you've limited your risk. And I talk about this a lot, but we've got so many new faces. I gotta keep talking about it. But going long this 37, simultaneously going short this, you only have 120 at risk. Versus if you bought 100 shares of Square at 37, you've got $3,700 at risk, my friend. Right? So, and you're going to make the same amount of money if it goes up to 40. You're going to make $300. Well, I guess you won't make the same amount of money. You're going to make 180. But percentage-wise. So, there was that, right? My idea of the 37.40. You could also go long that 37. Where's Wild Bill? Wild Bill would be so proud. You can go long that 37 and sell this 40. You're going to get 83 cents back on this trade. So you're still going to pay the, what was it, 353? Was it 353? Minus 83, so 270. Was that the number? Now I got to go back. Come on, bar chart. 253. Okay, sorry. Let me get my numbers right. 253. So it still costs you 253 to go long that 37 call at the further out expiration. But here, if you sold the 40 at the closer expiration, you're going to get back 83 cents, so 170, right? And then once this expires, so let's say this expires worthless. It doesn't get up to 40 bucks, right? And this short side expires worthless. Then you could go back and again short the 40, get a little bit more, sell more of that, sell that time value again. Now here's the thing, guys. There is event risk here, of course. So a lot of that is going to get evaporated after the earnings, even in that next month, right? We know this. But I was baiting Wild Bill to see if he was in the crowd, but he's not in the crowd. So sorry, Bill, I tried. Officially, guys, you don't have to overcomplicate things. I totally believe in the KISS method, the keep it simple, stupid approach in most things in life. What's going on here? Dave, how about if you sell the 35 and buy the 38 for a credit? That's for your bears out there, right? So it's a bear credit spread because you want it to go down, right? You're selling this 35. You sell this 35 and you're buying this 38. Hey, B-boy, if you are looking at, if you want to be a bear, right? You almost want to do, you always want to try to get to this at the money to be your short end. Maybe not always, but when we're talking about this earnings, sort of this earnings-driven world here, okay, you get more bang for your buck if you sell the at-the-money call. So in your case, you could even do this. You could sell the 37.38. Just getting back to your point here, I want to show you what this. Spell out your risk parameters here for you. So in this case, you'd be selling the 253, right? And buying the 205. So you got a 48-cent net credit. Now the amount of money that you could lose is the difference in the strike prices, which is $1 minus the 48 you took in. So you could lose 52 cents on this deal. So you can make 48 on 52 cents of risk, or 92%. And all you need is shares of Square to close at or below $37 at expiration. Okay? Now that's going out to December. You could also do something like that in this front month. You sell a 37, you buy a 38, and you're going to notice that the numbers aren't that far off. 139 for selling the 37, 148 for buying the 38. So here it's 45 cents with 55 cents at risk, or 81%. Okay. So typically when I'm doing a bearish or a bullish credit, I don't go at the money though. I'll go kind of out of the money. What it's going to do is it lowers my return, but it also lowers the chance of losing, right? Because the further out you go, the stock just has to not go up so much. So you can win in three scenarios. The stock goes down, the stock goes sideways, or it just doesn't go up so much. Versus if you're at the money there, yeah, you're going to get a lot of return for it, but you need the stock to go down. Because going up a little bit, you're going to lose. Well, I guess you can say you go on sideways, you're going to win too. So, but if it goes up a little bit, you're in trouble. Okay? All right. So That's actually not a bad idea for a bear. Now, this would be among the more aggressive credit spreads that we've talked about here. So what do you guys think about that? I'm going to throw this out there. A bear credit being short the November 17th, 37.38 call spread for a 45-cent net credit. Are there bears out there? Any bears? Any bears out there? Because your risk versus reward is pretty good on that. You can make 80%. Front week bear credit. Let's look at a front week bear credit. And again, you don't necessarily have to go at the money, but this is where you're going to get your most return. It's also your highest risk. Okay. And now let's compare two of these. So let's compare the 37.38, and then we're going to compare that to the 40.41. Obviously, this one's going to offer less return, but also less of a risk of happening. And then over here, you have a much higher return, but a lower risk of being in the money. You said bull credit. You did say bull credit. You did say bull credit. Bull credit. Okay, so we got a little bit of bears, got a little bit of bulls. AJ, I'm with you on that. As far as bullish and holding common, I think this puts, if I were, you long-term shareholder, Square, you're not worried about any of this. You still got that 27% growth. But we're doing this just for the giggles of this earnings event. What do we think is going to happen here? Overall, my long-term thesis is right there with you. All right, so bull credits. One idea for you, okay? If you got money in your account and you are bullish on the long-term prospects of Square, all you got to do is just sell these 36 puts. There you go, Jacob. That's what I'm talking about. Just sell it. Naked put. That doesn't mean you have to be naked when you enter it on your computer. You just sell this. And then what happens is you get a 128 credit. Should shares of Square get under 36, they will be put to you at $36. So you're going to have to pay 36 bucks for your Square. But here's the thing. Lower that 36 by that 128. So your cost basis on Square is going to be $34.72. And if you're a long-term bull on this stock and have $3,400 in your account, that's not bad, right? To basically get the stock at a $2 discount almost to where it's trading at now. So there's that. Selling that is one way. If you don't want to get the shares put to you, okay, you could do a short put spread where we're going to get in here and either sell this 36.50 or sell this 37 and then buy, a 35 or 36. Or if you want to be more conservative, you basically say, okay, again, 350 is what that options market was pricing in, and I'm going to sell out of the money by that 350 amount. Lower on the risk scale, but this is the thing, guys. I think if you're going to do anything credit related, you got to be compensated a little bit more because of how much Square has moved. So there's a higher likelihood, I think, of this thing moving more in one direction or the other. So you don't necessarily want to get caught up in one of these credit spreads, even on the bullish side. Okay, because if it doesn't work, you're going to get hammered for it, and we're not in the business. We're not here to get hammered on it. And that was the front week. That was all front week action. So those are kind of quick hits there, Dr. Paul, that you could look at. Okay. So officially, I think Square is something you want to own for the long run. And I'd be comfortable just selling puts out of the money here. And yeah, the addressable market is huge here for Square. But again, that lending arm, I think if Wall Street gets a whiff of this lending arm, it's going to be good. Officially, I'm going to say the trade that pays is my bull debit all the way. The bull debit long is a trade that pays, in my honest opinion. That's not the only place to get hammered, B-boy. You can go to the park. You can go behind in the Walmart parking lot. You could go to Applebee's. You could go. I'm just. You can go to Home Depot. Trade that pays. Is the bull debit. I'm being aggressive with this. I just like the long-term prospects of it. And what has this market been rewarding here recently? Tech's been getting rewarded. FinTech overall is hot. This is where it's at. This is where it's at, guys. I think if you don't have Square as a long-term position, it's something that you should consider for longer term money. That's how honestly I like the oh, that's right. I forgot about that, Dr. Paul. Forgot all about that. I prefer the term fantasy sports bar, Dr. Paul. Okay, back to Lotto. Danny, you're getting it. Ask and you shall receive, my friend. The scenario is really that Square comes out, has a fantastic report, and the Bulls are off to the races. Now remember, as our disclaimer, Danny, it's always, well, you might have a better chance on the Lotto the day after. So the day after earnings, maybe just fading what happened. But we'll address that later. I think you got to do 40s. I mean, it's out here. The answer is it's all the way out here, Danny. And look, these are kind of expensive. 40s are still 68. So if it moves more than what the options market is pricing in, it's still going to cost you 68. Maybe that's not too bad. How much is it costing out here? If you notice, these puts are cheaper. Yep, the puts are cheaper. So there's some call speculation over here. Lots of speculators on the call side. And a lot of those specs happened at this November 17th expiration because there's 16,000 contracts of open interest over there. But I'm going to say the Lotto is the 40 call. November 11th, or November 10th, right? $40 call. Okay. And you see Dr. Paul senses my hesitancy. Hesitance. Same thing. It's like they're paying a lot of money out here, guys. That's a lot of money out there. And you can use a spread, so you can be a madman. You can go 40, 41, or out there. Basically, if you want to do it, you want to get aggressive, you go out of the money with your call, maybe even 39, and then you could sell like a 41, Danny. Look at that. 93 minus 45. It's going to cost you 48 cents, and you can make $2. 4 for 1 if the thing goes to 41. Not bad. Not bad at all. But I think that $40 call is probably close. Probably close. I'm always nervous about a stock that has made the move that Square has made. You know, here up at highs and you want to be bullish on it. Here's the thing. Whatever happens, let's say Square comes down, it fades. At least a short call, you can buy that back for like nothing, or you know it's going to expire worthless, and then we could play a move higher again after that. I know I give a trade that pays because I have to give a trade that pays, but I would. This is risky business with the stock up here. Okay, risky business. What am I, weekly? You know, daily. Really risky business with the stock up there, but yeah, it's moved a lot. I'd be more comfortable waiting for Square to get back to that 50-day and then selling puts at that 50-day, or just going along the stock at the 50-day than messing on this report. I think this is a really high-risk report, but the way that things have been going and rocking and rolling, it could really move. And look at PayPal, right? I mean, PayPal is proxy, my friends. Similar. Does this look familiar? Stock at highs, gap and go at earnings. Stock at highs, gap and go at earnings. So why not? There's a gap and go there. So that'll be my official thing. But very high risk stuff. Not for the faint of heart. All right, gents and ladies and gentlemen. That's all I got. I gotta eat lunch, man. I didn't eat any lunch yet, but I did have breakfast. I had a well, I guess if you could call it breakfast. I had a grande scrambler from Taco Bell. Grande scrambler from Taco Bell. It was delicious. All right, so that's all I got, guys. I will see you all in the chat on Discord. Again, if you're not hooked up on my distribution list, you know what to do. Shoot me those emails, livetrader@zax.com. And I'm going to fire up this Foreman grill, cook up a steak, and drink some of this delicious Crystal Springs water that I finally got here. So thanks so much for hanging out with me here on Zach's Live Trader. I'll see you in the chat room, and I'll see you mañana for NVIDIA. Have a good one.